When Mario speaks and the markets freak. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday, the 26th of July. Well, here's what Mario Draghi said. Mario Draghi, as you may well know, is the president of the European Central Bank, the ECB. He said today that within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough. His exact words. My thoughts are, well, Mario, talk us cheap, show us the money. Let's see what happens. Anyway, let's get started. We're going to be starting with a little bit different format today. We're going to be looking at starting with the crude oil. And crude oil, basically, you can see that we've had a move up, obviously, from the below the 78 level. This is an area where the market has traditionally found support, certainly for the last couple of years. Now, we had a move up. We sort of got to here and we sort of stalled and came back down. This little counter trend rally below the parabolic tells me a couple of things. One, we are looking at this in terms of our longer term trend. And the longer term trend we're seeing here is the monthly, of course. This is the long-term trend right here. On the weekly, which is what we use sometimes, well, not sometimes, for trading certainly in our World Cup portfolio, which will have the results coming to you very soon on that, is the weekly for trend and the daily for timing. Now, the reason I show you that is because right now we had a situation where we were long from 87.23 and we exited for 90.16. So that was a profit of approximately 3 cents, or in this case, $3,000 a contract. We are not in this market on the intermediate term basis. Even on a longer term basis, we are still out of the market, because if you're using the monthly for trend and the weekly for timing, you'd be out of this market. And I think that's an important aspect to make. So here we are. We're below the PSAR right here. And you can see this is where the PSAR came up. So it looks to me as though we could perhaps even go a little lower, even touching the lower end of the Donchian trading channel. Now, we thought it would go back to the middle, which is this right here, this line right here. And it certainly did that. And we've had a little bounce, but there's really no follow-through today. There's something quirky about this move today with what Mario Draghi said. And I think there's not a lot of conviction on the upside. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be the euro. And the euro, we are going to cover certainly cover the stock markets, but this is the euro. And the euro had obviously a big day. Yesterday, if you may remember, during our show, we talked about the short covering. We thought we could see some more short covering. Of course, today the announcement from Europe was a big short covering rally. But look where it stopped. This is a key area. You stopped at both the previous resistance level right here and also around the midpoint of the Donchian trade channel. So for my feeling is we are going to see this market sort of maybe regroup. We certainly I don't believe we're going to see this market rally dramatically up to the 126, 127 level. I don't think that's going to be in the cards. But I would not be surprised to see it just hang around these levels, maybe 123, even to 124. But I think that's going to be pretty much where we are for the rest of this week. And we are in an overbought condition. So I don't think anything has changed in Europe, and saying those things isn't going to change anything, in my opinion. Moving into our trade triangles, we basically have a minus 65, which equals a trading range, but the longer term monthly and weekly is still negative on this market. So let's pay close attention to those indicators. Moving along to the gold market. Gold obviously put in a pretty good performance, but pretty much stopped where we thought it would stop, at the 1620 level. That was the resistance that we had penciled in for this market. Not a bad performance at all. And both our monthly and weekly are still negative, so nothing to get too excited about, in my opinion. So we are overbought, and as you can see, we have, let me just show you what I'm looking at also in here. We've got here's the previous high here, and if we take that right here, and you see we're actually lower than that, just sort of beginning to bend down. If that's the case, then this would sort of look like a little bit of a negative divergence, meaning there's not a lot of real power behind this move on the upside. In cycle-wise, we could be looking at this sort of cycle high here, cycle high here. But again, it's really this number here says it all. It's a trading range in gold right now. Can it change? Yes, it can. Would we get bullish if it moved higher? Absolutely. But it really has to move quite a bit higher than where we are right now. Certainly, I think over the 1650 level would really create this big base, but the market's not there yet. Let's see how it plays out, but let's just clear the screen and go to our next market. So today's action, basically, it was all out of Europe. At 6 o'clock this morning when I got up, was looking at the markets, the equity markets were lower, and as were some of the other metal markets. So here with copper. Copper looks a little bit dismal to me, and I'll show you why. Basically, we have this sort of doji line right here, sort of like right here, and it just seems like it's just had the little pop-up to the midpoint, no real strong trend, and certainly you're looking at this market with a situation where you've got our monthly, weekly, and daily all in a minus 100, meaning a strong downtrend. We did see a little bit of a divergence here, positive divergence. Not a big one, but a little one. But also we're in a situation where we're sort of stuck in this trading range. We really need to break out of it, either on the upside here, moving over the 360 level, or on the downside, moving below the 325 level. We thought for a while we would see this market. We still have not ruled out further downside action, particularly if the equities begin to get weak in the months ahead. So let's clear the screen and go to our next market. And I promise you we'll get to the equities. They're definitely here. Silver is really much to do about nothing. I'm not going to even mention too much about that. It's just in a trading range, 65. And the Reuters Jeffrey Index, kind of an interesting thing going on there too. We're back to a minus 55, indicating a trading range. You're below the PSAR. You're seeing the grains rotate a little bit more than they were doing before, and I think that's something to pay attention to. But nonetheless, I would not be surprised to see us even go back down to the 290 level, which is right around where the midpoint of the Donchian trade channel is. So let's see how that plays out. Now, going right along to the S&P 500 cash, I said I promise you we'd go there. And here's the action so far. So even with today's rally, it really didn't get anything going on the upside, in my opinion. And I think reality-wise, I would say as we get later in the day, I would not be surprised to see this market come under pressure and certainly close with 1354 right now on the S&P 500. I would not be surprised to see it close lower than that number. I'll just tick down right there, but I would not be surprised to see it lower than that number. And certainly if you saw it close below 1340, which is possible, I think that would be very, very negative for this market. So let's see. We haven't changed our mind. Our trade triangles, our monthly trade triangle is still negative. Longer term, short term, we've had this weekly in place, and it still is in place. But we need to see that change if we're going to get a downward move. 55 is a trading range. That's it. So let's go to our next market. This is the NASDAQ. And the NASDAQ doesn't look that great, partly because of what's happening to Apple. Apple's under pressure today. Really no follow-through, a little concern about the iPhone 5. And here is, well, that's still the NASDAQ. Let's go. Well, that was the NASDAQ we want to see. I'm sorry. So here's the NASDAQ. You can see a little bit of a different picture. We do have a plus 50, which is right in the middle of the range. It's a trading range, but you can see it just didn't have the same pop, the upside. Plus, you can see we've got a red candle as opposed to a blue candle on the S&P 500. So I think we were oversold. I think we can come back a little bit, maybe go sideways, but I think we'll see this market come under pressure. And on the industrials, pretty much the same picture there. Really a big pop. Everybody got very excited. I just don't think, if you look at this on a close-only chart, which is here, there's really not anything to get excited about. It just looks like the same old, and we're getting to a situation where we're getting overbought. So let's take a quick look at the grains, because they're really the magic for the whole markets. And let's put our candlestick charts in there, and you can see we've had the down, we've had the up, we've had the down. Now it's another down day. It's really beginning to rotate. We're in the midpoint of the Williams percent R, so we're not oversold, not overbought, sort of like in the no man's land, so to speak. So I think that we want to see this market really develop a little more before we get too excited. But longer term, the trend is up. The monthly and the weekly is still up, and they're the key things to look at. Trying to pick a top here is really, in my mind, foolhardy. You can do it for maybe a day, but the reality is it's not a trend. The trend is very clearly in this market on the upside, and that's what you want to look at. So let's go to our next market. The next market we're going to be looking at is the wheat or the soybeans, or it's the corn rather. And corn is the same pattern. We're sort of beginning to develop this sort of rounding top here. Still too early to say it's a top, but nonetheless, you've seen a little bit of a breakdown here with the, and let me just show you what I'm talking about in terms of a divergence. Divergences are basically when you have a market going higher like this, and you have the momentum going the other way. So here you are. This is the first one right here. So we did make a new high right here, and yet the divergence did not make a new high. So you get that downward slant. And of course, the way we're going right now, it looks as though we may see some further weakening. But the reality is, it's a bull market. And that's the key to look at. Trying to pick a top is foolhardy. We maybe just consolidate and go higher. It's too early to say, but the trend is your friend, and the trend is clearly positive in this market. So let's clear the screen, go to our next market. In the next market, we're going to look at soybeans. Soybeans have been strong. Of course, they've had a pullback from the highs, but nonetheless, the trend is clear. And you see we came back to the midpoint of the Donchian trade channel. We did get oversold. We sort of coming back a little bit. So I think we're going to regroup here. And from there, I think we may have another challenge to the highs. But still too early to tell if the trend is broken. I don't think it has. You got a monthly and a weekly, still very positive. So let's see what is in our portfolio. We've got a few minutes left here. We've got JP Morgan, Chase, Citibank. Let's take a look at the two banks. Citibank, the big news, of course, Sandy Wheeler said break up the banks. This is the guy that said we should have financial supermarkets. So here's the bank. This is Citi. You can see it opened higher based on Mario Draghi's comments, but it really hasn't followed through. And when you get a red candle like that, it means that the opening was higher than where we are right now. So that's just vice versa. The opening was lower on the blue bar than where you closed, and on the red bar, it means the opening was higher than where we are currently trading. If we close down here, I would not view this as a particularly bullish day. Also, you've got your overbought situation, and you came from an area that is previously supported at the lower end of the Donchian trade channel, just like we did here. We came up to the midpoint. That's where we are right now. So that's what I would look for in this market. Bank of America, still a dog in my mind, and you can see we got another red candle here today. So I think we're overbought. I think we'll see this market come under pressure tomorrow, and certainly if not tomorrow, then next week. So again, the markets look a little bit heavy there. So we got some other things to look at, but one thing is interesting for a trade this weekend, a 52-week low, it'd be the Netflix. I'm not sure what is going on with this stock, but it looks terrible, just terrible. Minus 100, the trend is clearly down, and you can see we've been short from 79.76, and obviously the trend is clearly down. So let's just scope this out just a little bit further. So you can see we've taken out the previous lows, and if you go back a couple of years, you can see we've taken out the lows here. So to me, if we close down, let's say a new low and close low on tomorrow, Friday, it's an ideal short for the weekend. And you can cover those on on Tuesday on the opening. So that's what I'll be looking at this tomorrow when we do our updates. So let's see how that plays out. And let's see what else we got. Caterpillar reported good earnings, but Apple is really, this is going to be, I think, one of the keys in terms of the NASDAQ is going to be Apple. Apple is a big part of the NASDAQ. And, of course, look at today's action. It's not good. The markets are up, but there's some concern about the iPhone 5. The longer-term trend is up, but that will change if we go below 520. Now, it's a long way away, I know, but this market can move pretty quickly when it wants to. So I would say certainly you should, if you're an intermediate-term trader, based on our trade triangles, you'll be out of Apple right now. If you're a super long-term trader using our monthly trade triangles, you'd be long from 355, and of course you'd have $225 per share in this, which is a huge profit. I mean, this is an incredible trade. But we're getting down towards the lower end of the Donchian trade challenge, plus we're getting oversold. So we may be seeing a rally coming into this market very soon, so we'll have to see what happens. But the one thing you should do, if you haven't done this already, and you've probably seen me do this before, is our personal one-on-one Market Club coaching. That's right, you have a personal coach, someone who works with you to help you. So the call is free and the consultation is free. So why not give us a call at 877-219-1482. I think you'll really be surprised at what you'll learn and how it can help you improve your trading for the balance of the year. Hey, Adam Hewison for Market Club. Thanks so much for stopping by. I'll be back tomorrow with an update on all the markets. Have a great trading day.